Okay, now the streaming has started. Yes. Who's this? Yeah, I got you. Okay. All right. Okay. All right. Yeah, sure. Go ahead. No. Homework and exams and attendance. Those practice questions is just for you to practice. That's all. Right. What's going on? All right, so today we're going to go over chapter 8 and chapter 9, the process costing and activity-based costing. So traditionally, process costing is usually considered very difficult for accounting students. And based on what we have for before the midterm exam, I would say the process costing is probably the most difficult chapter before the midterm. And the topics that our students find challenging in this course are the process costing, and then the next one is the variance analysis. If you have take 101 or the first cost accounting courses, I don't know whether you have the teacher or the instructor lectured on either this topic or not, but if you have seen it, it's very good. If you have not, make sure you pay attention to today's class because it's not going to be easy. And I have uploaded supplemental material to our course website for the process costing and also for the ABC costing. And make sure you go through those exercises. And I also uploaded my own teaching notes, the full comprehensive teaching notes for the process costing. And the reason why I do that is I went over the process chapter for the process costing in our textbook, and I found it's probably not very well explained. The things are flying everywhere in our textbook, and it can be difficult to follow this textbook, and it's how do I put this? The process costing is not an easy chapter to write, and it doesn't really matter you're using this book, textbook, or other textbook. It's a difficult subject to write, and because now later we're going to explain to you why it is really difficult. But so if you have read the chapter already and find it difficult to follow, go ahead and download the comprehensive notes that I uploaded and follow that to see if you can understand it better that way, right? But next week is our midterm exam, and process costing is going to be in the midterm exam for sure, right? So make sure you study this, right? Okay. All right, so first let's try to understand what is process costing. Okay, let me see. So the for process costing method, we consider the cost assignment for a continuous process. So when this happens is that the production is in a continuous process. It keeps making a certain goods. Like for example, juice factory, they keep making juices, and car factory keep making cars, right? It will not pause just simply for the accounting purposes. Okay, I'll say this is end of month, and let's pause everything, let's finish everything so the accountants can get the records right. No, the process costing it's hard because the process is continuous, does not really have a start at the end time. Okay, so as you can imagine, if we are going to do it this way, when the accounting interval comes, right, there must be things that are still in the middle, right? We haven't finished making it yet, or we haven't finished everything, right? There are things that have only completed like 30%, 50% complete, but now we still have to account for the value, right, of those unfinished goods, or value of all the efforts that we have put into making these goods. Okay, so first thing that we know is it is a continuous process. It does not pause for accounting reasons. And we also know that as product flow through the process, okay, the value for the various VIP goods, the intermediate goods, need to be accounted for, right? So we have kept using the example of the intermediate goods of juice concentrate when we try to make lemonade, right? So as the product flow through the process, we turn lemon into lemon concentrate and turn lemon concentrate into, mix it into lemon juice. Okay, so when this lemon becomes lemon concentrate, it's an intermediate good. Okay, and this intermediate goods, the value of this lemon concentrate is beyond just the raw lemon in there. Why? Because when during the process of making that lemon concentrate, we applied effort, direct labor into it. And the reason why we call this direct labor a part of inventoriable cost, because the cost that we paid for the worker to squeeze this juice, those costs become inventory, part of the inventory, right? So originally we may see that lemon, it's $10 worth of lemon, right? But because we applied effort to squeeze those lemon for, let's say, $20 an hour, we spent 10 hours on it, so that's $200 worth of labor, right? These $200 worth of labor, it gets added onto that intermediate goods and become part of the inventory. So that $10 worth of lemon, from our inventory perspective, it's not $10 anymore. It's actually $210 worth, okay, of a lemon concentrate, because the direct labor that you add onto it is considered inventoriable costs. And also manufacturing overhead, right? Like anything that related to manufacturing activity, they can be assigned to this and as part of the inventoriable costs as well. Okay, so first thing we have to understand, this is a continuous process. And the second, we have to understand that as goods flow through this process, right, we have to make sure that we can account for the value properly, right? So what is exactly, right, in the inventory and what is flowed out, and how much effort or how much inventoriable cost we have applied. These are the things to account for in process costing. Okay, so say here the value of the work in process, need to be considered, have include the DM, the direct material, the direct labor, and measuring overhead, and all these are what we call the inventoriable costs, okay, that are added to the process at various stage to arrive at the correct value of the inventory. Like earlier we discussed, right? What exactly is the value of that lemon concentrate? It's not just the value of the material, that lemon. They also included the labor we applied and also the manufacturing overhead we allocated to it. That is the value of the inventory, okay? So when looking at this example here, let's consider this. We see a process of making bottled milk. In the first department, we have a homogenization department, and then it gets passed on to the pasteurization department, okay? And then gets passed on to the packaging department. After this packaging department have finished, then we have finished goods. So what we know is that at each stage, each department over here, department 1, are you guys able to see it? See this? Okay, let me blow it up a little bit so you can see the clear. Okay, here. So as you can see, we have homogenization department, the pasteurization department, and the packaging department. After the milk is packaged, it gets passed on to the finished goods. So as we can see, at each stage, new material, right? Like at here, milk is added onto it, right? And get into other department, new material. At bottling, bottle get added onto these department, right? So at each stage, new material, labor, and overhead cost, right, are added onto the value of the inventory. Okay, so these inventoriable costs, okay, and they are not just simply expensed, right? Because when we are the goods go through this department, right, the labor is not just simply expense as a period cost. The over here, the direct labor and other overhead is not simply expense as a period cost. They get added onto the inventory, right? So the value of the inventory adds up, right? It accumulates, right, to this stage. So at this stage, when we look at the bottled milk, the cost of the bottled milk include all these costs accumulated together, right? So at this stage here, that cost of the inventory should capture all these manufacturing efforts, all the resources that we have sacrificed, right, over here into that cost of that bottled milk. So that's, from the bird's eye view, what the process costing is about. So the complication comes from each process here, or each department here, must account for the value of their own inventory, right? And here, over here, we are making the homogenization process, and over here, we're doing the pasteurization process. So they make intermediary goods at each stage too, okay? So this department has this department's costs, right? Direct material, direct labor, overhead, and this department has its own direct material, direct labor, and overhead. And over here, this department here, packaging department, the overhead may, of course, include the depreciation of the machine, right? Need to be allocated to each bottle of the milk in order to arrive at the cost per bottle, right? So that's what we see here. Each process and each department all have to account for the cost. So to understand the process costing, we have to go back a little bit further when we talk about the flow of cost, okay, and the flow of units. We have always talked about this idea. The flow of costs, right, is how the dollar flow into the process. Okay, we added $200,000 of value into this process, right? But then the unit is different. Okay, the flow of units is, okay, we are making 20 bottles of milk, right? But what happens is that there are some situations you may not have any beginning inventory because you have consumed all the inventory at last stage, or sometimes you may have a beginning inventory, right? Maybe there's 2 bottles left from last period you haven't finished, and then you added some bottles in there, right? And you take it out. So the flow of goods and the flow of cost, sometimes they don't come together. So as we learned in manufacturing cost allocation, we know the unit manufacturing cost is the total manufacturing cost divided by total unit produced. It's the same idea that we're looking at here, okay? The total manufacturing cost over here divided by the total units. Total manufacturing cost over here divided by the total units. Total manufacturing cost divided by total units. Same thing here. when we arrive at this point, we have the total manufacturing cost of all these combined and divided by the units that's produced. Okay, so the problem is over here now. Now, if the things are still in the middle, still are in progress, still in between departments here, oh, these some goods over here in department 1, some goods over here in department 2, how do we account for those costs? Okay, account for the manufacturing cost at that point or the total units produced at that point. Okay, so in process costing, the nominator and the denominator, it can differ from department to department. And that's what we need to see. Use the flow of cost for the nominator and the flow of units as the denominator. Okay. And to consider the flow of cost is not a big problem because when we see the accounting records, the flow, how much we spend in this period is quite easy to capture. The problem is here, the flow of units. Okay, to properly account for the flow of units, indeed, how many units have to go through a process, we have to consider the idea of equivalent units. Earlier, we already talked about the equivalent units in a way like, oh, okay, for example, like this picture, we're looking at the process week by week. So the end of week 1, okay, that's this bottle of milk, it's only 50% done, right? And during this period, we started working all these 3 bottles here, and they're completed. So there are 3 bottles completed here. But the problem is here, the end of this week, we start making another bottle, but we are only 75% done. Okay? So the question would be, and how many units did we make in week 2? Right? That's the idea of equivalent units. So as you can see, there's one way of calculate is, okay, we only make 0.5, we only make 10, we need 1, 1, 1, so that's 3 bottle here plus 0.5 plus 0.75, right? Also, that would be the equivalent units we did in week 2, right? Because from our accounting perspective, okay, these are the work done, right, in this period of time. So that's how we accounted for equivalent unit. But that's only one point of view, how these should be accounted for. So the equivalent units concept, consider what we call the semi-complete goods. Over here, 0.5 or 0.75 into an equivalent count of the actual goods. So the accounting for equivalent units need to consider the percentage of work that is done. Okay. And the next consideration is, when is it done? What is considered done, right? And that getting to the problem here. What is it the process costing can be so confusing to some students? It's because there are 2 methods of accounting here, 2 main treatment of considering the equivalent units. First, we call it the FIFO method, the first in, first out method. Using the FIFO method, all calculations are based on this definition here, the work done during the current period only. And this sentence is very important here. That's how FIFO's point of view. Okay, we only consider the work done during this period. We don't consider work done in other period. No, that's other periods work. But another method, we call it the weighted average method. And this method takes into the consideration of total work done to date, regardless of the period in which the work took place. Okay, so the keyword here is to date. What is the work done to date? I know this can be some kind of confusing right now. Don't need to worry. We will go through an actual example. Right now, you just need to know there's a difference in a point of view or in accounting treatment when it comes to equivalent unit. There are 2 methods of accounting over here. Okay. And on top of that, another layer of complication comes from the equivalent unit consideration for direct material, direct labor, or manufacturing overhead can be different. Why? Let's go back to this milk bottle here. Okay, so when we say over here, this bottle of milk, right? When we started the work, the direct material has already applied, right? The material has been used. It's just the labor, the conversion process that we are only stuck at 50%. So from the point of view, how much direct material is consumed, right? This bottle, the direct material of this first bottle here is consumed in the last period, right? This 50% here is just the labor, the conversion process. Direct labor and manufacturing overhead is still at 50%. So you see, if we were to look at equivalent units, the equivalent units for direct material or the conversion process can be different. Also over here, as you go through this process, one bottle of milk, one bottle of milk, one bottle of milk. Over here, same thing. The direct material has already applied when you start the work. You have to get all the material, expense the material ready, but the problem is the units for the equivalent unit for conversion is different. So if we were to just look at the direct material, right, of equivalent units of direct material is actually 1, 2, 3, 4, right? Because all the material for this bottle has already been used. But if we were to look at equivalent unit for direct labor and the manufacturing overhead, then we need to consider when the work is done. Okay? That is the problem. So when we are doing the allocation of the cost, right, we need to consider there will be different treatment, FIFO and weighted average method. And we also need to consider the equivalent unit calculation for direct material, direct labor, and MOH can potentially be different. Okay? Over here. So let's try this out. Use this as an example. And let's try to consider how to account for the equivalent units. So we have something very simple here. I have a physical flow of units, right? Beginning inventory over here and the units added, 60,000 units added. And then we completed and transferred 58,000 units, and we have an ending balance of 5,000 units. Okay, and there's some more information. 40% of the WIP is done in this period, and 20% of the ending inventory is completed in this period. Okay, and on top of that, the assumptions that the direct material has already applied. So let's take this into the workshop view. What's happening to my workshop? My whiteboard is not showing. Hold on for a sec, okay? Let me make my whiteboard. All right, I got my slides back. Let me see why I can't get my whiteboard. Okay. All right, got it. Hmm. So the textbook doesn't really give you a good way or how to do that. This is what I would recommend you to use the equivalent unit worksheet that I listed here, okay, and pay attention to the definition here, okay. So over here, let's work on the FIFO, work done during the current period only, okay. And over here, this WAVG and total work done to date regardless period. Remember that these two definitions really matters. So first, let's collect the information here onto our whiteboard. So we have a WIP flow of inventory, flow of units. We have a beginning balance of 3,000, and we added unit of 60,000 units. Okay, and on the other hand, we know we completed and the transfer out, that's 58,000 units, and then we have 5,000 units left in the ending balance. Okay. So based on this calculation here, there's one thing that you have to figure out before you jump on to the worksheet is how many units over here. That we start and finished in the current period. Okay, let's try to answer this question first. How many units indeed we start and finish in the current period? Let's try to think. Is it 58,000? Is it? No. How many units we start? We start here, right? We add 60,000 units, but we did not finish them all, right? See, we still have 5,000 left in the ending inventory. So we know the unit started and finished is actually 60,000 units minus 5,000 is 55,000 units that we actually start and finished in current period. Okay, this is an important piece of information when we consider the unit equivalent unit in either method. All right, then let's take a look at our worksheet here. How to use this worksheet. Okay, I would recommend you to take a piece of paper out and just write down the method first, right? FIFO method, and then the second one is write down the things you're trying to track. Most of the exams will put the conversion cost together, the direct labor and manufacturing overhead. They will put this into the same category. Very, very rarely do we see that the textbook or exam questions separate the direct labor and manufacturing overhead. That's way too complicated. So usually what we do, we just look at the conversion cost. So this equals to all right, this is the equivalent unit in the beginning, equivalent unit for current period, and equivalent unit for ending. In FIFO method, what is the definition? See, work done during current period. Right? So let's consider the direct material FIFO method. Okay, where is my, let's come back to over here. Okay. So the beginning balance for direct material using FIFO method, work done during this current period. Is the 3,000 should be considered? No, because the direct material was consumed last period, so not here. Right? How about period over here? The work done during this period, we started, right? How many units, and we finish how many units over here? Start and finish. These are the work done in this period, right? We start and finish 55,000. So we know for the direct material, we start and finished this 55,000, right? Over here, try to remember, oh, where is my slides? All right, let me get my slides back, hold on. Think this visually, right? This is what we are tracking. These 3 bottles of milk over here in the middle. Start and finished. 1, 2, 3. Right? Done. That's the work done in this period. Okay, start and finished. This look like a 6, so let me correct it. 55,000. But how about the ending units for direct material over here? The work done in the period, right? So it is actually how many units over here? 5,000, right? Units that we actually, right, start. Okay. We already consumed this direct material, right? That's considered the work done during the current period. So far so good? Yeah. All right. So next, let's look at the conversion cost. So over here, we know that the beginning inventory 3,000, we know that 40% of the WIP done is done in this period, right? 40% is done in this period. So we consider this 3,000 times 40%, right? And then work done during this period for the over here, we know that's a start and finished, right? We start and finish 55,000. So here it's 55,000, no question. We start and finished, right? But how about ending inventory, this 5,000 over here? We set note from here that 20% of the ending inventory is completed in this period. So over here, we only have 5,000 times 20%, right? So here we have 1,200. Here we have 1,000. Okay, so we know using FIFO, our equivalent unit FIFO DM EU is 60,000, and the FIFO conversion equivalent units is what? 257,200. So that's good, right? So let's break it apart here. Now let's consider the worksheet of weighted average method. Same thing, let's write the method first, WAVG. And then we track DM equals to beginning plus something in the edit plus ending. Conversion cost equals to something plus something plus something. All right. Okay. The interesting part of considering the equivalent units, right? You have to pay extremely close attention to this, is that we consider the work done to date, regardless of the period, right? So that means when we consider the weighted average method, we consider the works that are completed and transferred out over here. We do not care about the beginning units. Now, I only care about the work done to date. Okay, to this day, I have transferred out so many goods, and that's what I care about. That's the main difference of the weighted average method. So over here, when we are looking at weighted average method, looking at the equivalent units for direct material for a conversion, we can just write nil here. Not zero, just we don't consider that. We consider as nil. We don't consider this. Right. Cross it out, cross it out. Okay, since we are considering the definition is work done to date. So the number that we care about in weighted average method is here. The 58,000 that we say is complete and transferred out. Okay, that's complete and transfer out, 58,000. So when it comes to consider the weighted average method, the equivalent units for direct material, right? We consider it is complete and transfer out, so it's 58,000. Over here, also 58,000. Okay, and weighted average method over here, the direct material has already been added, right? So we need to add that in, the direct material of 5,000. And over here, 20% of ending inventory is completed, so we are adding it here, 1,000, right? So that's the work done to date. To this date, what is done, right? We consider this complete and transfer out, complete and transfer out. We don't care about this period, right? And then we add what is done right before the bell rang, right? Say, oh, it's a time for collect accounting records over here. That's how many percentage are done. Okay, so for those of you try to follow the textbook has an awful way to track the weighted average method equivalent units. It's very, very bad. There's no way that one could understand what the heck they were doing. And yeah, I don't even want to show you. It's convoluted. If I teach you that method, you get so confused, and I'll be bombarded with the phone calls and emails. Why does that make sense? Okay. So don't even try, right? But if you want to venture, you will arrive at the exact same number. Trust me. And this is by far, the best method that I have ever taught, I have ever used for many, many textbooks and many, many years. Right? There's no better way, and this is the right way to look at it because we look at it from the definition perspective. Right? It took me a long time to come up with a good system to teach that and try to do it this way. Okay, so now let's take a look at this. WAVG DM equivalent units. This is 63,000, and WAVG, the conversion cost equivalent units, is come to 59,000 units. Right, so let's see. Over here we have 60 and 57, and over here we have 63 and 59. So they are different. So if you consider that the numerator and denominator over here, earlier we talked about it, right? The per unit, right, cost will be different because the denominator, okay, is different. The equivalent units that we are tracking is different. Okay, so far so good. It's quite interesting, right? So try to understand this and do it in your own way when you do the process costing, right? But make sure you lay it out in this workshop format mode, the 3 columns here, right? And remember, when you are in FIFO, you are tracking the work done during current period, and in weighted average method, you are considering the work done to date. So the center column is different. EU, current period, right? Start and finished in this period. Over here, start and finished. And here is complete and transfer out. All right, okay. So when we put this whole thing together, what we are looking at, right, it's no different than the cost allocation that we learned earlier. We go through this step-by-step consideration, okay? Hold on, sorry, my dog. The dog's outside. Let me no, just tackle him, please. Over here. Okay. Oh yeah, sure. Just tackle him. Right, sorry, the neighbor is there outside with dogs. All right. So we go through this step-by-step process. The textbook usually start with step 1, but I would recommend an additional step for you. I call it the step 0, just to give yourself an overview of the information. Okay, and this overview of the information you usually do in a way to collect the information into a T account. So just to look at it, what does the information look like? Because the accounting questions, if you have done your let's say 101, or you did the practice questions, the cost accounting questions are usually quite confusing. There's a big paragraph, a lot of numbers. Some information are relevant, some information are not relevant. So I usually recommend students to do it in a way just to sit down and collect the relevant information, look at it from the bird's eye view first. So that's a step 0 do. And step 1, okay, we need to account for the physical flow of units. What's the flow of units look like, right? And step 2, account for the equivalent units, right? That's what the exercise we just did. We did 2 methods, FIFO method and weighted average method. We also account for the equivalent units of direct material, right? and equivalent units for convergent process, right? And then step 3, we consider flow of cost. This is usually the easiest because these information are usually given to you already, right? And step 4, we compute the cost per equivalent unit. It's very easy. We take the flow of costs, right? The period cost divided by the equivalent units, just the information you've seen so far. And step 5, we compute the value of work in process item and the cost of goods the manufactured. All right. So this is very easy. You just take per unit times per unit cost times the unit. That's all, right? But the main confusion of process costing always comes from step 2, always. And the frustration comes on step 2 is because the error cascades. If you make the error here, everything after that will be wrong, right? Because your equivalent units are wrong. So now your per unit cost is wrong. If your per unit cost is wrong, the value of the inventory will be wrong, right? So pay extra addition to this equivalent unit. If you have the equivalent units done, right? You have it, you understand how to do it. There's no confusion in it. You try it here and there every time. It's perfect. Then process costing is easy for you. The only confusion, right, always come from this step 2, right? So a lot of my experience told me students usually don't like cost accounting because it's complicated. There's so many things to track, right? So many different formula, right? And so it's like, well, the financial accounting is so much easier, right? But it's true in a way, right? But once you start practice accounting more and more, you realize that the managerial accounting is the true accounting. It's accounting to learn, accounting to practice your entire life. Even if you start with the financial accounting, you'll end up with the managerial accounting. You always end up. That's what accountants do, really. So don't get frustrated. Don't feel like, oh man, I hope I will never see process accounting again. No. You live and breathe it. This is the way of life, right? If you don't like it, you really have to think hard. Do you really want to be an accountant? Well, you have to like it. Well, otherwise it's going to be a sufferable job for you, right? So for this, let's try example. We'll come back. We'll walk through a example that I made, and the Chewbacca Lemonade Incorporated. You can take a look at it. It's already on iLearn, okay? And quickly read through it, right? And we will try to do this together, okay, in the workshop. And you can also take a look at the comprehensive notes that's also made for this lecture and also for this Chewbacca Lemonade, right, thing. You can try it. Just go to iLearn and download it, and we will be back. How about 15 minutes? 7:10. Okay, 7:10. Right, use this opportunity to download those supplemental material. find this, but it has Mario Kart on the front.
Like the mini card?
Not the card, just the box. The box.
What box?
Like the box like this. You find it with Mario Kart.
Which game?
Mario Kart.
No, it's not. There's no game for that. There's only a little card.
Like the whole box.
No, you don't have this.
You have the little card to hold on.
Which one?
This one.
Cheese and grapes. What? Good. What is there? What title is that?
I don't think it's there.
No, I remember because I took the game from your room. There's nothing. There's no game inside. Because if I see game, where would I put? I'll put place. I'll put it in a box. I will let it away. I don't know that one. If I find out, I will give it to that. If I find out, I'll put it in a good place. I will let that put it somewhere. I'm out there. I will let it. I'm confident. I'm not that one. Just put it in there. I'll store it.
Why suddenly want to play? What game is that? I thought you already passed the game.
This thing is coming out.
Oh, I suddenly remember what I was eating in my dream.
Okay, and let's come back to class. Okay, so let me show you a few things that we have. On the left hand side, what you can see here, this is the comprehensive notes. Okay, so if you are not if you're feeling like, oh, I still do not understand, you can go through this comprehensive notes. And basically it's a lecture, right? And I just write the entire thing out, right? And you can try it out, try to see this entire process, okay, what it's about, okay? And I try to write it in a way that is easy for a student to read, okay? But that's the entire comprehensive notes. And I also have a worksheet here, okay? With explanation and the steps that's taken. And what you have to do is that just try to fill out the information here, okay, to the best of your ability when you're practicing this question, okay? And I will release the solution, okay? I will release the correct solution, what time? Maybe tomorrow, so you have some time to practice it, okay? So I will release the right solution for it. Then you can check your answer. And what you can do is you can perhaps print this out, okay? or write it down on the piece of paper. Just follow this structure. Okay, but I find it that the best way to do this is probably just print it out. Would be easier to do it that way. Okay. All right, so let's take a look at the questions first. Okay. Chewbacca lemonade practice question over here. Make it slightly bigger so we can all read. The text is still kind of small, right? Okay, let's do it in this mode and blow it up so we can read it together. So let's read this. So Chewbacca Lemonade Incorporated process costing. Chewbacca Lemonade Incorporated produced bottled lemonades, direct material blended at the beginning of the manufacturing process. No materials are lost in the process. Direct labor and overhead costs are incurred uniformly throughout the blending process. On June 30th, 6,200 units were still in process. Okay, that's our first piece of information. 6,200 units were still in process on June 30th. So that means we have a beginning inventory, right, to track off. Right? And all direct material has been added, but the units were only 60% complete in regards to conversion costs. Right. So another piece of information. Okay, the 60 units in the beginning inventory, only 60% are completed. So direct material costs of 20,150 and conversion costs of 21,390 were attached to the beginning inventory. So during July, okay, 50,500 kilograms of lemon were used at a cost of $189,750. Direct labor charge were $120,488. Right? So you see, these are what we call the flow of costs. Right? And over here, these units are the flow of units. And overhead costs applied during July were 200,000. The ending working class inventory was 5,000 kilograms. All direct material have been added to the units, and 45% of the conversion costs have been assigned. Okay, so output from the blending department is also transferred to the packaging department. So required information here, it required you to prepare a process cost report using the FIFO costing method for the blending department into July, and also process cost. We don't use weighted average cost method. Okay. For July. And the third one is identify the cost of goods manufactured. Okay, so for this type of questions, like I said earlier, the first thing you to do is get an overview of this information. What does it want? It wants to for us to produce a cost report. The cost report is what you see. Over here on this side, this is what the cost report look like. Okay, you have a direct material to track on the one column, the conversion cost to track on another column, and then you follow the step by step to finish each of the process. Okay, and you can collect all the information, right, from your calculations onto this worksheet here. And when this worksheet is completed, is actually the cost report. And then it wants you to identify the cost of goods manufactured, COGM. Okay. So what's cost of goods manufactured? Do you remember? The cost of goods manufactured is all, right, the inventoriable costs, manufacturing related costs added together, direct material, direct labor, manufacturing overhead, right? That will give us the cost of goods manufactured. Okay, So where do we start? Over here, we take a step-by-step approach, right? Although the textbook says the first step one is supposed to T account to account the flow of units, right? So let's try to start from the step 0, okay, to actually track information. Okay, so let's get over here. Find my pen. So let's give an overview of the information that is given to us and write the note down. So we have given this information of the flow of goods. In flow of goods, what we see on June 30th, right? We have a beginning balance of WIP at 62,100. Okay. We also know that 40% work is done in this period. Okay. We also know that during July, the work added is 57,500, right? You see here, all direct material has been added, but the units were only 60% complete, right? So 60% complete in the prior period, that means 40% work need to be done in this period. Okay, you see, sometimes thank you for asking, because sometimes how the question is worded, right? They make me mislead you to this. And I would prefer to track the number of the information that we need to track of this period, right? So instead of saying that 60% done last period, I would say 40% need to be done in this period, okay? And so when we do the calculation, we just times 0.4 instead of times, figure out what is done in last period and all that. Okay, and then we have an ending balance of what? 5,000 units. And ending 1,000 units, we know 45% done this period. Okay, so use this information, we add it up together, right? And you see 62 over here, 57, and minus 5,000, we know that the work completed transfer out is what? Right? That's the work complete transfer out. Okay? about the work started and finished? Started and finished this period. Where do we get that? We started 57,500, right? We still have 5,000 unfinished. So we know the work start and finished, right, is 52,500 units. Okay? And just like the tip that I gave you over and over when we were doing calculations, right? The problem when it comes to this type of calculation, the common mistake, common error comes from student who forgot. What we're looking at here is unit, not dollars. Okay? So if you want to avoid that mistake, you may want to put a small u here. Units. Small u, units. Instead of writing the full U, all right? Because it's very, very easy that we forgot to write a dollar sign, right? For the dollar amount, right? So make sure, if it is talking about units, put units in there. Units, so we can always know that's units. So that's, a quick overview of the physical flow. And we have more information to collect, right? So also give us some information on direct material. Okay. So this is cost flow, right, of DM. So we have a beginning balance of DM, okay, and what? Let's read here, right? Direct material cost of 20,150, right, was attached to the beginning inventory. So we know beginning the inventory was 20,150. We also learned that, okay, over here, okay, 189,750 was added. Add 189,750, right? The problem is over here. Complete and out. We don't know. We also don't know the ending balance number. Right? On the conversion cost side, we also have the idea, we know, understand that the beginning balance of conversion cost was at 21,390 given here. Okay, and we have added DL edit. We added direct labor charge over here, 120,488, and manufacturing overhead, $200,000. It's added. Same problem here that we do not know. Is that we do not know what's complete out. We don't know, and we don't know what's the ending balance over here, right? So because we don't know this ending balance, and we also don't know how much is completely transferred and out, what does that mean for accountants? that means we cannot properly account for the manufacturing cost. How much manufacturing cost did we really incurred in this period? Because we definitely know it's not this number, the number added. It is not the total of these added, is not. Because we have ending inventory to consider. What is still in the ending inventory? We must properly account for the cost of complete and transfer out, right? In order to come up the right number for the cost of goods manufactured, right? Because cost of goods manufactured will affect what number? Cost of goods sold, right? Okay, so if the cost of goods sold number is affected, what happened? Okay, it affects our operating income, right? Okay, so you see, if our manufacturing cost is not properly accounted for, right, our operating income may be misstated, right? So that's why it is important for us to figure out, right, how to allocate, how to assign these costs, right? So we can properly account for the value of our cost of goods sold. So our operating income will not be misstated, right? Okay. So you see, indeed there are opportunity to fraud, to intentionally misstate the percentage of completion, or to intentionally misstate, okay, the value of our, let's say, complete transfer value or ending inventory value, because when you misstate this value here, let's all give you an example. If let's say the ending balance is 2,000, and you intentionally misstate that of 12,000, what happened is your complete and out, this value go down by $10,000, right? Because 10,000 you have allocated into the ending balance. They say, oh, okay, no. That's actually in our ending balance, right? So if you put the ending balance value higher, that means your complete and out, the cost of goods manufacturing, the value goes down by 10,000. And when your cost of goods sold down, what does that mean? Now your cost is lower. Your sales price is the same. What happened? Your operating income goes up. Okay? So a lot of times, fraud is committed this way. Corporate fraud, they intentionally misstate their inventory value. Okay? They intentionally misstate or miscalculate what is accounted in their manufacturing process. So therefore, they can inflate their operating income. Right? So these type of things are important. Right? If you don't understand it, right, you may get into the trap that your operating income is misstated that you didn't even realize. Right? So that cannot happen. So now we have this basic information. Very good. We already got some of the information that we needed in our upcoming steps because we collect all the information here and try to figure it out. Right? Basically, what we are doing here is we figured out the flow, physical flow of goods over here. We also figure out the flow of cost in terms of direct material and the conversion costs, right? And we've seen that there are question marks that we don't know what the value is. And at this point in our head, right, we have to know, oh, this is actually our task to figure out what the ending balances are, to figure out what is the value of complete transfer out. Therefore, our manufacturing costs can be properly accounted for, and the COGS, the cost of goods sold, will not be misstated, right? So let's start with the step 1. Prepare a T account to account for the flow of physical units. So that's draw the T account to track the flow. We did over here. Right? You guys want to do it again? Yeah, let's do it again just for the sake of it. For a nice, beautiful, big T account, we know we have a beginning balance 40% to be done in this period, right? So that's 62. And we have units added at 57. Okay. And we have an ending balance units at 5,000. Yeah. Because in terms of direct material, right? Direct materials are already applied, right? But we haven't finished the work, right? The units are still half finished. They are sitting in the inventory. Just think if it's a big item, right? You try to assemble a motorcycle or assemble a big car, right? You already get all the parts in there, right? But they are not completely done. And even when we think about in terms of the lemonade, the squeeze lemonade, right? We think it's just squeeze and down, squeeze and down, squeeze and down. But that's not necessarily the case, because if you think about it, we have to get a lemon basket in. Okay, it's a big basket of lemon. We have to go through this batch, right? So when we think about go through that batch, maybe 60% of that batch is squeezed and packaged, right? That will then consider the work is done, right? Okay, so that's why here in the beginning inventory or beginning WIP, it's still called work in process, because it's not yet done. It's sitting there as a work in process. Intermediary goods, not done yet. Because if it's done, it will be transferred out, right? It's not done, so therefore it's sitting there, okay? So does that answer your question? Is that what you want to know? Yes, and that's a lot of time it is the case, right? But it is not to be done that way, because if you are accounting for a real production environment, if the value of that intermediate goods is huge, that's an airplane, right? You cannot just say use the excuse I don't know how much is done, right? And then try to massage the number here and there, because if that happens, then your manufacturing cost will be misstated. You see, and then the operating income cannot be relied upon, right? So even if you're an auditor, right, the auditor, you have to audit this process because the FIFO method or weighted average method is allowed in GAAP, right? So if they claim they use a FIFO method, you really have to take a look, how is your percentage of completion defined, right? As an auditor, you have to go check, right? You have to see how did you measure it? How was this reported? Why did you call it that percentage, right? For small, medium-sized company, maybe fine, right? But for a larger company, especially publicly listed company, you have to account for this, right? And there are reported fraud cases by manipulating manufacturing cost, right? So that's how it is done. It is, like you said, it is likely that when this company is not big enough, they may not have the resource to report it. So they may take a method designed for small and medium-sized company. We would just consider that the work started or the work finished. They don't consider any FIFO or weighted average. of the working process. They just consider there's no working process unit at all, right? If the working process unit value is very, very low, right? That they can do that, but not. But if you let public company to do that, a big company to do that, there'll be big accounting disasters there. Because the income number is not to be relied upon, right? Okay. So here we have complete out of 58,700, right? Oh, well, I forgot here. 45% done. And we also need to calculate the work started and finished. We started this number is not done yet. So 7 units. Okay, so that's our first step in information. If you were to look back to your worksheet, you can find this information over there. Beginning inventory, unit started this period, you need to be accounted for. Right? Beginning inventory, unit started and complete. Ending inventory, units to be accounted for. Right? It's all here, but we don't really need to use this for the whole thing. You just follow our method here. And step 2, account for the equivalent units. Use T account or the worksheet to account for the equivalent units. And don't forget, right? FIFO method and weighted average method have different treatment for the EU, right? So let's try to regurgitate that. FIFO method, how do we do that? Work completed in this period, done in this period, right? And this period only, okay? And the weighted average method is work done to date, okay? So let's take a look at that. Step 2, EU calculation. So we set up the problem, FIFO, DM, 40%, beginning plus work added plus ending balance. So we know EU for beginning, like over here for the FIFO method is started and finished. And then we have the EU for the ending balance, right? For the conversion, also that's write it out. EU beginning plus start and finish plus EU ending, right? So we know this EU at the beginning is 40% to be considered in this period, right? And here is 45% to be considered in this period. Okay. So it's up to you where you want to write the whole formula out, okay? And then fill in the number or work on the FIFO and work on the weighted average method. So let's just take this one step at a time. Let's consider FIFO first. So the FIFO will consider the direct material. We know the beginning direct material, the beginning balance at the June 30th, that direct material was already applied last period, right? So there's nothing to account for. And the start and finished, we have that number at 52,500 over here, right? 52 and 500. You see that? Okay, and when we consider the ending balance, right, of that 5,000, the direct material has already applied. So the entire 5,000 counts, right? Okay, over here. So we have the beginning balance of 6,200 times 40%, because we understand that 40% is to be done in this period in order to complete the 62 units unfinished work and transfer it out, right? We have to consider that. And then 52,500 and plus what? The 5,000 units times 45%, right? Okay, so here we have 2480 plus 2500 plus 2250, and here we have that. So the way to write it down carefully is to do it this way: 50 dm EU. Why do I put EU here? So you know that's a unit. It's not a dollar, right? Okay, it's important that always identify as a EU, and FIFO conversion cost EU is equals to what? 57500 is equals to 57230 units. Okay, so we have now FIFO equivalent units accounted for. Let's consider that weighted average method. Same thing, set up the problem. But what we are looking for is here the beginning balance and weighted average method. What's the definition? Work done to date, right? So in the center column, we are looking for the complete and transfer out. And here we're looking at the ending balance. So since in weighted average method, we only consider the work done to date, regardless of period, so we don't consider this part. Okay, so here the work completed and transfer out, let's go back up a bit, is 58700. Right? And plus the ending balance of a direct material already applied. The work done to date, we already done the work. We dump the material in there, start assembling the airplane or whatnot, right? Okay, so 5,000. And over here is we got this number earlier, right? Okay. So over here, add these two together. Now we have weighted average method, dm EU equals to and the weighted average method conversion cost equivalent unit right? So now we figure out the equivalent units. When you have this step figured out, you are like 80%, good for the rest of the work. Really, the equivalent units it's is the hard part. If you figure out the equivalent units, you're just like, oh my God, I'm almost there. What? 2 minutes left? No, maybe. It's not that hard. Right. Okay, step 3. What is step 3? Account for the cost flow. Okay, the tips here is use T account to account for the cost flow. Okay, remember, in FIFO method, only current costs need to be accounted for, and the weighted average method, work down 2 day. Okay, the beginning inventory value is considered to be included in the value of work transferred out. So don't worry about that. You will just see how it works. All right. Okay. So let's move to the step 3. Cost flow of DM, right? Earlier we already have that information. The beginning balance of WIP is 20150, right? We tracked in earlier, right? When we look at those information, right? So DM added is 189750. Same thing here. So we don't know the ending balance. We also don't know the complete out. Don't know. Okay, let's set it up quickly. When you are doing the process question, right? You probably have more freedom than me here because I have just this digital pad. I have to keep moving back and forth. But for you, if you did the step 0, you already have the T account ready for you, right? You just need to fill out that information. But too bad I can't go back and forth as easy as like looking at a big piece of paper. So that's why I'm putting everything down again. Right, so let's take a look at the conversion cost here. Okay, so the conversion cost, we have a beginning balance of 21390. DL added is 12048A, and MOH added is 200,000. Okay, we don't know this here, and we don't know any balance here. But if we look at this, we know if we add this over here, number, and over at this number here, we will get what we want, cost of goods manufactured, right? Because that's basically what it is. The adding up all the material costs and all the conversion costs together, then we will get that information. So how do we do that? Okay, now we have this step 3 information figured out. We have the cost flow figured out. That's compute the cost per equivalent unit. So we know the cost per unit formula is what? The current cost divided by units to account for, right? So in this case, we divide it by the EU. Right? And you probably already guessed that because the EU is different in terms of FIFO method and the weighted average method, so we have to look at differently. Again, same thing, write it out. FIFO, right? DM per unit, right? Okay, you can add a dollar sign here just in case. Okay. DM per unit. Okay, dollar sign conversion cost per unit. Okay, so the current cost that we are looking at, sorry, you see, I don't have the information, so I have to scroll back up. Over here, we added 189,750, right? And divided it by the equivalent units. Right? Okay. So some of you may ask, Professor, why is this 189,750? But over here, when we look at the cost flow, there's a beginning balance over here. Because we consider what? In FIFO, work done in this period, right? Okay. So even though there's a value here, but that work that was done in another period. It's not done in this period. Right. So we only look at the current cost over here. This comes down to $3.30. And for the conversion cost, we get the direct labor and the conversion cost of 200,000, and divided by the equivalent units for FIFO method. Let's go back and take a look at what that is. Here, 57230. $5.06 per unit. Okay. Same thing we go through with weighted average method. Okay. So weighted average method, remember what the formula we consider? Work done to date, right? So we are looking at everything that is done to date, finished, doesn't really matter what the period it is. So when it comes to the weighted average method, we know that is 189,750 plus the beginning inventory count. Okay, why? Because this value will end it up in the complete and transfer out anyway, right? So that's why we considered it here. And divided by the equivalent units over here, 63700. Now we have $3. Okay. What's this? Can you help me calculate it? I don't have that number with me here. Do you have a calculator? Yeah. Is that the right number? And the conversion cost, same thing here. We have 12048A plus 200,000 plus 10390, the beginning balance. Right? You see, the flow of cost and the flow of units are different, right? Okay. In weighted average method, the reason why we call it the nil is not zero. It's because these units are actually included in here, complete and transfer out. That's why we see 58700 here instead of 52500. Right? These units here, let's take a look at the flow of goods again. Complete transfer out over here. Okay? And then we only added 57500. So these 58700 included these units anyway. Okay? That's why we don't consider it in the equivalent units calculation, because this is already included in here. Okay? This is just a coincidence, I think. All right. So, how do we finish the last step? Now it's we get this information, cost per unit, right? Right. Now we have this cost per unit information. How do we get this piece of information back? Right? It's actually quite easy. You see? There are several ways for you to do that. One way is to take your unit flow, the flow of units. Where's our flow of units? Sorry. Flow of goods, right? You see that here? The flow of goods, right? You can use this flow of goods, just plug in the number, right? You can get that information, or the other way around is using the preferred way. I like to use the worksheet that I did, because that way it's easier for me to figure out the difference between a FIFO and weighted average. So step 5. So FIFO. Earlier, remember we used the worksheet. FIFOs for DM is beginning plus this plus ending, right? The equivalent units, right? So what do we have that number here? 0 plus 52500 plus 5,000 units, right? Okay, this is for DM, and the conversion units are what? I forgot. 2480 plus 52500 plus 225. Okay, these are units. So all we have to do is just times the DM at what? $3.30. And the conversion cost is what? $5.60. So let's plug that in. Times $3.30 times $3.30, and here times 560 times 560 times 560, right? Then we will get that information. Okay. You see that? You guys see that? Okay. So now we have all the information that we need. For the weighted average method, we have NEO DM plus 58700 plus 5,000. Okay, and we know the DM at the price of $3.30, and we have the conversion cost at 561. So we know it is neo plus 5A700 plus 2250, right? So now this we have is 63,700 units to account for times $3.50. And over here we have 60,950 units to account for times 561. There we have it. Okay, that's the units to account for. So now you can either use this information here to add it up together, or use the worksheet, right? The information from this and doing the worksheet in the same time, back and forth. You see, either way will work. It doesn't really matter. It's very easy doing that way. But the hardest part is always figuring out the equivalent unit. Okay, so I will release the solution to just do it tonight. Then we'll just release the solution tonight, so you can check your work with the solution. Okay, so let's take a break. You guys, let's do 15 minutes. What's that? Okay, come back like 8:15 ish. Okay, and we'll go to the next one, the ABC costing. ABC costing is fun. I love ABC, and we'll do another example in ABC. Right? Also Star Wars related. I love Star Wars. All right, see you guys in a bit. Oh, okay. I don't play that game. I don't play any of those games. All right, let's come back to lecture. So I have uploaded the solution already, and this is what the solution look like. And if let's regurgitate what we have seen so far. Remember what we have done. We account for equivalent units over here in the step 2. You see? Okay. Direct material, nothing, 52500, and ending balance. Beginning balance, start and finished. Ending balance, the equivalent units. This come to the units to account for. And you can see here, the equivalent cost per unit, the current cost, and the total of current cost over here for the conversion. 120,488 plus 200,000 divided by the equivalent units for conversion cost. We got $3.30 and $5.60. And then in step 5, we did that. You see? 0 equivalent units start and finished, right? And then direct material finished over here, right? So we got this, all this added together. You see, that the ending balance. Now we got everything. Okay. So once you get all this information added up together, then you will get what's at the bottom of this document. Oh, how do I get there? All right. Over here. When you add this up together, okay, you get the information. So you can check your practice, the step-by-step, and the map onto the solution we have here, and it will enhance your understanding. There's no way that one can understand just process costing just in one go through the lecture. You do have to practice yourself. Okay. Right. Practice. It's gonna be on the final. It's gonna be on the midterm. I guarantee you. Process costing will be on it. All right. Let's go to ABC costing. ABC costing. Where is it? Okay. Do you guys feel overwhelmed by process costing a little bit? It's okay? Yeah, good. It's not that hard. The hard part is figuring out the equivalent unit. Once you have that done, you'll be fine. So in this chapter, we're going to discuss yet another the cost management system, right? And just like we said earlier, the cost management system, what's it for? Help us allocate costs, right, into perhaps different product line, different department, so the manufacturing overhead can properly accounted for to different product line, different orders, right? Then we can compute the cost of goods sold or cost of goods manufactured effectively. And ABC costing, right? To think about ABC costing, let's go back a little bit, right? Remember when we did two-stage allocation system, what did we do? Oh, say direct material, we can trace. Direct labor, we can also trace, right? But what happens with the manufacturing overhead, right? Then we say that, oh, there are certain costs, right? Machine-related cost, right? So if more machine hour to be consumed, right, should be allocated more cost. And then also we separate to another cost pool of direct labor related costs. So if more direct labor are consumed, right, more cost should be assigned to that way. So we separate into two cost pool, machine-related cost pool and the labor-related cost pool. Remember what we did? Right. So okay, if we go back to our workshop mode, then we think about what happened here. So in two-stage allocation system, we set up the problem this way, right? S72S and S66S, and we know there's direct material to account for and direct labor to account for. And when in two-stage MOH, we separate out to machine-related and labor-related cost pool, right? So machine-related cost pool can allocate based on how many machine hours, and the labor-related cost pool, we can allocate this cost based on labor hours consumed, right? Okay. That's basic the consideration of this. So if we lay out, issues look like this, very easy, right? So the logic behind it is that when we see the manufacturing overhead, we distinctly understand that there may be more than one factors, okay, that affect our decision in allocating the cost, okay? So one may separate the MOH into different cost pools, 1, 2, or 3, and each cost pool may have a different cost driver, hence different cost allocation base, right? This cost pool is driven by how many hours that are consumed. These pools are driven by how many labor hours are consumed, right? So that's therefore the different cost allocation base, right? So when we think about ABC, okay. So the first stage of allocation, it looks like this. Oh, the same thing. We still maybe divide into two different parts. Okay, over here, the cost driver, cost the driver 2, the labor hour, 2 different type of costs. But the question we ask here is a little bit different. Okay, we found the allocating the cost allocation base. We figured, okay, we can separate the manufacturing overhead into different cost pools. And in two-stage allocation, we separate into machine-related, labor-related. But it's not good enough, right? So we see this department 1 over here. The cost driver is machine hours. And for department 2 here, the cost driver is labor hour. But that doesn't really make sense, right? We started thinking about the real question is what actually drive the hours up and down, right? What did you do to consume more hours, right? I don't care about the hours. You just report to me 300 hours, 200 hours. I know if there's 300 hour, more cost should be allocated to this, right? But what I'm really interested in, what drives the hour up, right? That's when we start thinking about ABC. What did you do to drive out that hour to 300? What did you do, right? We want to find the real driver, not just the number, oh, hours up, hours down. Oh, this is labor related, that is not labor related. So we start thinking activities. What did you do to drive out the hours? Okay, so when we look at ABC, we start taking it, look at things differently. Oh, the activities that we do to drive up machine hours is setting up machine, right? We drive up labor hours to handling material, right? Machining drives up the machine hours. Packaging and shipping drive up the labor hour. So these are the activities that we do. The more setting up machine that we do, okay, drive up the hour. The more handling material or the more packaging that we do, drive up the labor hour. You see, that start making sense. A lot more than just looking at the hours. We start figuring out what are the actual driver behind all the things that we do. So instead of just sum up the hours and breaking it up, right? We start to think, yeah, what the things are the things that we do. So for product A, over here, we start analyze the activities that involved in making product A. We see, oh, we need 3 setup hours. We need 2 production runs, and we need 1,500 machine hours. And product Z, we need 9 setup, right? 4 production runs. So we look at things in terms of the activity done, right? Instead of just very crudely separate into, oh, how many hours over here, how many hours over there, right? Look at the activities of it. So setting up machine, consume machine hours. Handling material, consume labor hours. The more activities are performed, the more resources are consumed, right? Makes sense. Very good. So by doing this, we start thinking about it. Then we have to take a log cost pool or manufacturing overhead very differently. Instead of divvying up into different cost pools in a crude manner, we start to think on a different perspective. We design what we call activity pools. Different activity have a different activity cost pool. Okay? Setup pools, machining tools, right? Or QA, quality control, quality assurance pool. Right. So that's what we do. The first step in ABC costing is to determine the activity pools. Okay, these pools are designed by following a logical cost hierarchy. Because you see, designing those activity pools are not easy. You don't really decide it arbitrarily, per se. There's a hierarchy to it, and the hierarchy to it, that's what we are going to learn. The first is what we call the facility sustaining cost. What do we need to sustain the facility? Like, for example, costs related to the organization as a whole, right? Rent, like how many plants that you are setting up, how many plant managers, or how many the security inspections of the plant that you are doing, or product sustaining costs, the costs that are related to support a particular product line, such as product design, okay, or batch level. Costs related to batch of output. So every batch, perhaps you have to wash the machine. So every batch, you have to warm up the machine. Right? Every batch, you have to oil the machine. Right? So those are the activities that need to be done. And finally, that's the output unit level. Right? Costs related to individual units. Right? Such as the material costs. They are directly associated to the output unit. So some example of these activity pools are, for example, perform the plant security inspection, right? Okay. That will consume the labor hours, right? The more inspection that we run, the more the security guards hour that will consume, right? Okay, so the driver we know is the number of inspections done, right? How about product sustaining cost? For example, the activity done are production line maintenance, right? To maintain the entire production line, okay, to make sure the machine works. So the driver we know is the number of product lines. The more product lines there, okay, the more maintenance that we have to be done, right? So if you have 3 production lines, you have to do this for 3 production lines in every month, okay? So batch level costs, the activity that we do, for example, quality inspection. Okay, so every batch we do a quality inspection. Every batch we do a quality inspection. So the more batch are produced, okay, the more quality inspection cost we will consume, right? So you see the driver is a number of batches done. Okay, it's similar to see the number of quality inspections run. And output level unit, Like for example, the activity, say final assembly, right? Assemble 1 output, assemble 2, assemble 3, assemble 4. So, okay, the driver is naturally the number of units assembled, right? See? So for this activity-based costing, right, you see a pretty good picture. Oh, wow. Yeah, we can manage our company in terms of the activities, right? And indeed, that's what activity-based costing is good for, is what we call activity-based management. Okay, so with the knowledge of, you see, the cost hierarchy and the associated cost pool, also we now learn, we can compute the cost of each activity, right? Each maintenance run, okay, each inspection, right? Or a number of activities performed, right? Then the accounting function can then manage and fine-tune those costs associated. We can perhaps set up budget in the cost pool. Okay, we're only going to have the production line maintenance, set the budget at 5,000, no more than 5,000. We can do it that way, or we can try to reduce the cost of each activity, try to fine tune in that way. Now we know, we're not just like let the people do whatever they want. We try to fine tune those activities, right? So if we can reduce the cost of each activity, we know the total cost will come down. And we can also fine tune number of activities performed, right? Perhaps that if we perform a lot of activities, right, to finish one job, okay, or we can perform fewer activities, right? Okay, for one job, right? Okay, so that's the idea behind activity management. It is for easier way to attain the continuous improvement. You can always continuously to monitor those activities or cost of the activities or the cost pool, right? The cost associated with the cost pool, or even fine-tune the hierarchy itself, right? So workers and managers can further use this knowledge to make their activity perhaps faster, perhaps produce a higher quality of inspection, or to be more productive. But the problem with the ABC and ABN, right, is that itself can be very expensive. Why? No, that's what we call the ABC headache. And a lot of times that when the accounting functions, yes? Somebody asked me a question? No, okay, never mind. The ABC headache comes from because the successful implementation of ABC costing usually require a full support organization. Why? Because you see, now you are trying to look at the organization differently. You try to separate costs into different activity cost pools. Now, as an ABC consultant, you will figure out what are those activities, what are the hierarchies. And not only that, you have to collect a lot of numbers, okay? The determination of the categories or different activities can already be difficult and subjective, right? You need a lot of experience to do that. You see, if I ask you just, hey, go and take a Boeing, let's try to figure out the activity cost pools there. It's gonna be a huge headache. You gotta be really, really good in accounting in order to figure that out. Even for a small company, right? To figure out all the activities or what type of activity makes sense can be difficult too, right? Not only that, the problem is that it is very easy to over-engineer this process. Then you have so many type of activities to track. And in order for ABC to work, you gotta have a good record collection and reporting process. Or otherwise, right, you will not get those activities right. Every time you perform an activity, you have to go, okay, I performed this activity, how many hours? Or I performed this activities, what did I do? Right? So the data collection, monitoring, and documentation can be a major headache. Why? Because those production workers or production line manager, they're not accountants. They don't care. Their job is to make sure the goods are produced. Their job is not report to you, hey, I performed this activity and how many hours I did. I guarantee you, for anyone who try to do ABC, right, in a factory, that person may be either very powerful or a major jerk. It is so hard to do this type of work in an organization without meeting resistance. No way. Because you see, the more ABC you try to do, it is easy for you, right, to report, and it's easy for you to say, oh, we can make improvements there, here, improvements there. But you have to imagine from the worker's perspective. Now you are constantly being monitored, right? There's a hierarchy, okay, plant level, batch level, unit level, right? Product line level, right? So everything that you do, right? You have to watch out, and you have to lock down the numbers, right? In order for ABC to run smoothly. Okay, so it can be very difficult and expensive to implement this organizational wide, right? So that's the consideration of ABC. The structure of it is very easy, okay? The hard part of the ABC is the design and implementation. It is different from organization to organization, and to collect the numbers that will make ABC work in the long run is even harder. You are asking the entire the organization to commit to this way of management, right? Perhaps you need very, very good accounting information system in order to collect and compute those numbers, right? But how business done changes all the time, right? Can you re-engineer your ABC in order to meet the changes, right? So, but even with that saying in mind, right, for us, we still have to understand how ABC is done, right? What is the good way or right way to do it, right? So there are ways to do that, and we usually, just like the process costing, I like to do things in steps. Okay, so step one, you already know, is determine the activity pools. What different activity pools are there? And step two, the survey of current indirect expenses, right? Because that's what ABC is good for. The manufacturing overhead indirect costs, right? Now we can survey it and look at it to see what belongs to what, okay? This sort of activity belongs to facility sustaining. This sort of activity belongs to batch, right? This sort of activities belongs to product line, production line, right? Okay. So step three, mapping the indirect expenses to the activities so you can come up what the activities and its numbers in terms of cost allocation base and cost drivers. And then step four is to determine the activity cost allocation base, the denominator. And step five, calculate the activity cost allocation rate. Okay. And then activity cost driver times the allocation rate will be the activity cost. Okay, so that's it. Now let's do an example of we call the X-Wing company. Yeah, I love this example. Let's take a look at it. The example is already posted online. Let me see, X-Wing manufacturing over here. Probably can't read it. Let's blow it up a bit. Oh, can you guys read? Easier to read? Okay, good. So let's read it together. So X-Wing Manufacturing Company, ABC costing. So X-Wing Company, owned by Princess Leia, produces 10 different types of X-Wing fighters for the Jedi Rebellion. The company has, in the past, used a job order costing system for each production run. So they were job costing. Each production run is a job, is a job, is a job. So under the old system, factory overhead was allocated on the basis of direct labor hour, because assuming that was probably labor intensive, right? So they would use direct labor hour to allocate the cost. However, direct labor is now a relatively small part of the production cost, as the company has found a stable planet far beyond the Empire's reach and built the robotic machines to automate its factory productions. Very cool. So you were hired by Princess Leia as an ABC accounting consultant for the company. You have analyzed cost from the previous year and broke them down as follows. So we have direct material and 100,000 tons in this price, direct labor, 1,000 hours. But when it comes to overhead cost, okay, you have collected and computed that the setup cost, the 750 setup comes down to 22,500. There's maintenance, there's production scheduling, there's inspection, there's material handling, there's depreciation, and the power consumption. Okay, so let's think back from the design of ABC, right? So we have these cost information available to us, right? So next step is try to design a hierarchy. What does this cost belong to, right? Whether these costs are the facility sustaining type of cost, or unit-based cost, or batch-based cost, or production line-based cost, that has to be figured out. And the ABC type of questions, the textbook understand that this is a subjective process, right? Everybody may determine differently. So most of the time, the question is given in a way that these costs are already figured out for you. Like over here, you have further analyzed the cost hierarchies and decided the following structure. The unit level, we're looking at material handling, depreciation, and power. Okay. And batch level, setup costs, production scheduling, inspection. So for every batch, we consume the setup, we consume production scheduling, we consume inspection. And product level, we consume maintenance. So one thing a lot of times students ask, Professor, depreciation, why is depreciation considered unit level? Let's think about this for a second. What is depreciation unit level? Because you see, when it comes to depreciation, we look at the machine in a certain way. What way? Okay, this machine has a finite life, right? Okay, the finite life in terms of how many years we can use it for, right? And this how many years we can use for directly associated with the unit of runs, right? If we are planes at capacity, right, that we produce about 100 airplanes per month, and we can pretty much calculate that for every machine, every airplane that we produced, every fighter jet we produced, right, we consume X amount of resource out of that machine, right? So a unitized depreciation cost is superior than, let's say, production line based or a facility based cost, right? Even though depreciation looks like, oh, it should be, if you have one machine, one depreciation, right? But in the spirit of ABC, okay, we have to find out what really is depreciation associated with, right? So therefore, that's why here, right, this consultant you decided to put depreciation at unit level. Okay, so let's keep going. So Luke Skywalker has approached to price an order for 100 X-Wing fighters with a special design And this order is forecasted to require the following: direct material 500 pounds, direct labor 60 hours, right? And production scheduling, one production schedule will make this 100 fighter jets. And the setup, we need 2 setups and 2 inspections, and will consume about 100 hours. So the order would be produced in 1 production run, 1 batch. So that's why here we have 1 product scheduling, right? The company normally sets its selling price at 40% above the full manufacturing cost. So what you have to do is to use ABC to apply the factory overhead. Okay? The question asked is, what is the total manufacturing cost for the special order? And what is the gross profit for that order? And what is the selling price for that special order? Right? It's a lot to consider, especially when you look at this. The first time you see ABC, is the information are coming from everywhere, right? It is naturally hard that way. So let's go to our workshop, try to solve this problem. Let me get my workshop ready. Right, so the way to look at this is no different than what we have done so far. We know the cost management system is designed to allocate manufacturing overhead, right? So the direct material and direct labor, right? They are set it out this way. And next, we take a look at the MOH. Okay, and the difference that we already know, that the MOH is looked at differently. Okay, so it gives us some different levels to consider. Unit level, and we have batch level, right? And what we have, the production line, right? So that's called the product level. So we separate into different level, right? Over here. And the good thing we didn't, they only give you only analyze these 3 level here. So it's unit level, batch level, and product level. Okay, so let's start from the beginning over here. So the direct material rate is what? Is 75,000 divided by 100,000 tons. So we have a rate of 0.75. Okay, and then what you see here, the direct material is going to consume 500 tons, right? So we know the cost over here, is 375. Okay, that's because let's do it this way. The cost consumed is 0.75 times 500. That would give us 375. The direct labor, let's compute the rate first. The direct labor rate over here is 160,000 divided by 10,000 hours. We have the rate over here at 16, right? And then the direct labor over here is going to consume $16 per hour times 60 hours, right? See, direct labor hours 60 hours here. So our cost for direct labor is 960. So let's take a look at MOH then. Okay. What are the unit level here? Material handling, depreciation, and power. So let's take a look at material handling first. Material handling over here. So for the material handling unit level material handling, we have $6,000 divided by material handle 100,000 tons. So okay, we have the rate at 0.06, right? And then we applied to 0.06 times how many tons going to do? 500 tons, right? For this plant, that comes down to 30. Okay, and then we have, okay, this is not enough room. I have to write very big. Let's move this out here. Okay, now machine handling is done. Next one, let's do depreciation. Okay, so for depreciation, our pool rate, depreciation here is 200,000. Okay, divided by 20,000 machine hour. Our rate is $10, right? Okay, and let's take a look. The machine hour for this 100 X-Wing fighter flight will consume 100 hours. So times 100, that comes to 1,000. Okay, and power comes to 8,000 divided by 20,000. That's what? 0.40. Yeah, and times 100 hours. So we got $40 over here. Okay, is that all the unit level? Yeah, all the unit level, right? Over here we see material handling, depreciation, and power. So next one we go batch level. So for the batch level, we have setup costs. Okay, and we have production scheduling, and we have inspection. Right? So let's do the setup first. Okay, what's the cost of setup? All right. So the rate is 22,500 divided by how many setup? 750 setup. Okay, so the rate comes down to $30. Okay, so we need to do how many setup? 2 setups. The price comes to $60. And for production scheduling, what's the rate for scheduling? Here, 7500 divided by 500 batch. So it's $15, and we need to do 1 schedule run. $15. And for inspection, how do we do inspection? 800 inspections at 16,000 divided by 800 inspections. Now we get $20 per inspection as the rate, and we need to do 2 inspections. That would be $40. Okay. Now we finish the batch level. Now let's move down to product level. So in product level, we have only maintenance. Maintenance here, how does the maintenance charged? Okay. 4,000 divided by 20,000 machine hours. So the rate we have is $2, okay, per hour per product line. Right. So here we have 100 machine hour here. So 1 product line, 100 machine hour, $2 times 1 product line is 1 times 100 machine hours. We have $200. Yeah, right. So the problem of this type of setup is you have to capture everything here, right? So when you do ABC costing, when you did the rate calculations, make sure that all the overhead has captured, right? So nothing left unassigned. Unassigned, that means you didn't capture one of the costs, you let it go, then you'll be losing money. No. So every cost is captured. Let's go from here. Maintenance, maintenance done, check. Inspection, inspection check. Production scheduling check. Right. So that's how you do it. So when we add everything up together, all these costs together, and I have the answer sheet with me, so I'm cheating. So it adds up to the 2720. That's the total MFG cost. Right. So what is it asking? Total manufacturing cost. Now we got it. That's the price. Okay. What's the gross profit of the order? How do we get that? The company normal sell its selling price at 40% above the full manufacturing cost. So we know the full. You can do this several ways. You can do it 2720 times 0.4. That would be the margin, right? Or you can 2720 times 1.4. That would be the sales price. Either way, right? You can do that. So we know the gross profit is what? Gross profit in this case will be the sales price minus the total MFG cost, right? So in this case, it's the same as this margin number here, right? So the markup, or in this case, the gross profit, will be the 2720 times 0.4 equals to 1088. Okay, and the full price equals to 2720 times 1.4, right? Or 2720 plus the markup, same, right? That would be 3808. Ta-da, done. Okay. All right. So you see, the ABC itself isn't too hard. It's just allocation rate and that, and just multiplications added up together, multiplication added up together. The problem of ABC is here. Now, how do you get from this step to this step? Right? Who's that smart to figure this thing out? The hierarchy, right? And who did all the work to collect all the information? Oh, we did 800 inspections, right? To come up to this price for inspection. We did this much material handling, right? That's the art of ABC. The calculation of it is very easy. The hard part is this. How did you get here? You know? Okay, that's the hard part, right? Okay, so I know you guys are very tired. I'm also tired. After finish the process costing, everybody's tired. I see people are yawning already, but I appreciate that you stayed with me. Okay, so how many of you are still here? Oh my God, 40 is still here. Everybody's still here. Wow, I must be doing something right or something wrong, right? So go ahead and practice the process costing. All right. So the best thing I can recommend you is go through my comprehensive notes, right? I would discourage you to read the textbook. The textbook is so awful in this chapter. The other chapters are fine, but the process costing chapter is like, no, right? You just get even more confused, right? And the question, the process costing questions that I would ask would be very similar, right, to what I did. I would not give like special surprise, just like, hey, Russian door kind of questions. Opened up the door, there's something else inside and something else inside. No Russian door questions. Okay, and just logically thinking, right? So what have we gone through? The important thing, cost of goods sold schedule, COGS schedule. Wow, right? That's a big one. And next is what? CVP analysis for like break-even analysis, special order consideration. Those are important. And then we get into cost management, right? So starting from cost management is cost allocation, right? The step, it's cost two-step cost allocation, right? And we also did job costing. Job costing is easy. There's no art to it. And then we get to today, ABC and process costing. Okay. The set. Yes. Yeah, but the thing is, when you do process costing, it already included all the concepts that we've gone through so far, right? We've gone through the cost flow, we've gone through the flow of units, we've gone through equivalent units, right? We've gone through allocation. So when you think about process costing, it's really a accumulation of what they have learned so far. The things that we have not done yet in process costing is break-even analysis, right? So the question will not be exactly the same. You can't do that. Ask exact same questions in this kind of online format. People just, okay, that answer I know is 2000. Okay, no, the question will not be exactly the same, but will be reasonably similar. Okay, right? So and I'm still trying to figure out how much time I'm going to give, right, for the questions. Because it's a big question take a long time to do. And students are telling me that it take them like 30, 40 minutes to one question. I don't know, right? So I know it takes a long time, right? But the more you're familiar with it, the faster you can perform it, right? It's at the end of the day it's that you just have to practice a bit more to get there, right? So the answer is all posted, so let's try to do that. Okay, and I will be available to you, use either email or text if you have questions for the material, right? Okay. Yeah, 6 to 8 for the exam. Well, I don't know. Some people 2 hours may not be enough, So I don't know how to extend the time to more than 2 hours. I'm still trying to figure that part out on Connect, because on Connect, once the exam started, I can't change, extend the time. I don't know how to do that yet, but I'll figure that out. But don't get too stressed out over this. Practice, you'll get there. I'm not a monster, the class is not designed for students to fail. It's designed for students to learn. So I feel that you guys are doing well. You stay with me. You learned something. That you're nodding your head. Like good. Yeah. No, you want a class after midterm? Do you want one? No. Usually people are so worked up after the midterm. They are looking for the textbook to see what did they miss, and they were just like screwed up, professor. I'm out of here. No. Yeah, the problem contains the concepts, right? So I don't need the concept as the concept again, right? So just calculations mostly, right? And it will not be hard. That's it will be hard if you don't study. All right. So thank you for staying the entire time. Yeah. Oh, okay. Let me see. So our homework is usually due the day before class, right? So you want that I can change it to like what? Sunday night? Oh, okay. Good. The reason why I set it up for before class is because sometimes students, right, use the class time to do their homework. Don't do that. So okay. Yeah, I think it's so far I'm pretty satisfied with how students are paying attention to the class, right? You're actually sitting there and paying attention to what I'm doing, So yeah, I'm willing to make that concession to allow the homework to do like on Sunday instead of the. So how about the first homework? Do I extend that? The first homework. Oh. Oh, okay. Oh, okay. Yeah, I know because some of you mentioned to me, Lance mentioned to me, Michelle mentioned to me, Gurav also mentioned to me that if you don't put the exact thing in the exact block, they just okay. So when I might have to manually grade your work, because it seems like if I let Connect do everything, they may screw up somewhere, right? Actually, you did it right, but the Connect thing, no. Oh, nice, good. Okay. Okay. So one thing is that we're approaching midterm, so you guys have gone through several sessions, right? So I know this is still not as good as a real class, nothing compared to a real in-person class, right? But I'm trying to get there as much as I can with this, put things side by side, workshop, and so, yes, yeah, not much we can do. All right, so thank you, and chapter 9. Chapter 9 is what? Uh, did I? Yeah, no, it's no chapter 5. Did I? I thought this is chapter 9. Really? Let me see. Let me just make sure that is correct. No, if you look at the calendar, right, it says 2, 3, 4, 6, 7, 8, 9, right? Yeah, yeah. Yeah. Yeah, ABC is chapter 9. So what we're going to test on is 2, 3, 4, 6, 7, 8, 9. There's. Oh, really? Sorry. I wrote the presentation number wrong. Sorry about that. But ABC is chapter 9. ABC is chapter 9. Homework 2 contains the chapter 6 and chapter 7 and chapter 8. Yeah, so you can do homework too, but as a practice, right? And but it's completely up to you. Okay. All right. Any other questions? Mm-hmm. Yeah. Yeah. Yeah, you can. Yeah, you can. Just when you check your grade against Connect, and if you have a legitimate case, remind me. Okay, say, Professor, see, I did my midterm, and the midterm solution will be provided to you as soon as the midterm is done, right? When you finish your midterm, you will see the solution. So you see, okay, this is what I did, and I didn't get a grade. The Connect screw me over this, right? And you can let me know, and I can fix it, right? Okay. Yeah, I will change all that. Let me see if I can change that right now. Just make sure that it can be done, because homework 1's the due date is already passed, so that's what I'm concerned. Maybe I cannot change it. Did you guys, any of you regret taking this over the summer? Anyone? Kinda, eh? Yeah. Yeah. You know, it's a lot of work to go over, really. Yeah. Well, but good thing is if you take it in summer, you got me, because I don't teach cost accounting in other semesters. So it's pros and cons, right? Sunday is what? The 14th? Is Sunday the 14th? Okay. Sunday night at 11:59. No, 11. Hey, really? No. Save. Okay, I changed the due date, but I know how to do it now. Okay, so don't worry. All the assignments, the due date will be changed just to Sunday night, 11:59 59 p.m. midnight, Sunday night. Okay, but don't call me like 11 at night on Sunday, because I'm not gonna help you like in 1 hour. It's like, you know, yeah, there were students like that. You know, last semester I had the 307, and because of this COVID-19, we did not have midterm nor final exam. What we did is to have the student do a research paper, right? So a student like called me like 3 days before due date, said, "Oh, I don't know what to do." You should have told me earlier, right? It's like 3 days before due date. Not much I can do. Okay, any other questions? All right. Okay. Enjoy your weekend. Study hard. And I hope you guys all do very well in the midterm. And thank you. Have a good night. Bye.